Hi, welcome to TO Markets price action analysis, and today we're going to take a look at gold, as it's always a market that is interesting and many people are trading it. So let's take a look at what's happening in gold. And before we go there, let me just draw your attention to some of the latest successes. We just had Nasdaq and silver hitting our targets in yesterday's trading, so it's been a very good day for us. Before that we had USD CAD hitting another set of targets, both 1 and 2. Now we have again Nasdaq moving to both targets 1 and 2. And to show you that we don't just invent these, we have proof for all the setups and analysis, because everything is published beforehand at tomarkets.com/analysis. So if you go here, you can see all the analysis articles. You can go to recent posts and see that yes, indeed, these are tradable setups. Obviously, we don't provide investment advice and we don't provide recommendations as such, but we give you tools to develop your own trading. So in order to stay in touch and stay up to date with all the analysis here, you can go and type in your email address, and this will ensure that you'll get an email each time we publish new analysis here. So, and I mentioned that we don't provide investment advice, so I'd like you to pause your screen, read through the disclaimer, and only proceed watching the video if you agree that we do not provide investment advice but educational material only. Now, we also do have here something that you might want to do. So if you like the material that we provide you, maybe you can click the thumbs up icon there and maybe subscribe to the channel as well. And if you really want to help us out, please share this with your friends. So many traders are still trading without good, proper analysis. And as you can see from the list that I showed you earlier, we are hitting the targets on a weekly basis, and this analysis is helpful for learning purposes. In this video, I want to give you an overall picture on what's happening with gold and those markets that move together with gold, but also to give you some key levels and understanding on what's happening and what's likely to happen. I try to keep these videos simple so that there isn't too many things going on in the charts at the same time. So for instance, now we have only the oscillator there. I've taken everything else out so that you can clearly see what I'm focusing on. So let's get started with the bigger picture first. If we go and see, take a little bit more price history here. This is a 2-hour chart, and I'm focusing on the period after the 18th of halfway through August onwards, really. So whether we look at this market in terms of traditional trend lines, or if we draw a regression channel, we can see that it is really the proximity of these trend lines here and the upper end of this regression channel that has been holding the price moves back lately. So there is this general trend down in gold, and obviously with this being the case, we can say that it's always more likely that the market will follow the momentum that's in place rather than break out from and change the direction. And obviously, if you go and look inside this channel, there'll be periods when the market is moving more forcefully to the downside and then bounces back. But there are also periods like here when the market is just moving sideways and not doing much. And that's kind of similar situation we have now. So if you break this chart and if you break this price action into parts or components, you can see that there are periods when one market moves, but those periods are quite short-lived and they are followed by the sideways price action. So we have a range here, we have another range roughly here, and then another one here before the market started to move. Now the market is moving in a range again. So let's zoom in a little closer to see what's going on. So gold has been moving sideways, roughly inside this range. We have on the upside we have 1912.90, let's say approximately 1913 is a level that market hasn't been able to close above. And on the downside we have another level at about 1889. So this price actions sideways is kind of it's basically telling you that the traders really don't know where they should move the price, or everybody is roughly happy with the current price and there is no need to push price further. But obviously at some stage there will be an outbreak, market will break out from this range and then we'll have a more substantial move. But let's go to that in a moment. First of all, I want to focus on the fact that we have a higher low, and that's why market is moving higher in the range at the moment, and obviously approaching the resistance levels as it does so. But there's another reason, or maybe the reason for this higher low is evident if we look at something else, and that is the stock market. Okay, here we have Nasdaq overlaid on top of the price of gold, and usually there is this sort of inverse relationship because the stock traders tend to see gold as a safe haven asset. But now lately, that whenever the stocks have been going higher, the gold has been going higher as well. And whenever there's been movement to the downside, it's happened in both asset classes. This tells me that markets are now more focused on not so much on asset allocation between different asset classes, but really they are focusing on the economic basically they are looking at money coming from the government, and if there is more dilution on the dollar, then it's the value of the dollar that is in a focus here, rather than individual sort of differences between asset classes. So if the value of the dollar is diluted with new QE, then, or if there is a promise or hints or news on possible new QE coming into the marketplace, then the risky assets go up because the traders believe that the value of the dollar will go down. But now lately, like we said last week on Thursday, we believed that the stocks were going to come down, and so they did. Now they have corrected quite a bit, so much actually that they are likely to bounce back higher. So this is another reason why gold is moving up now. But how long can this last? How far gold can go? This is obviously the question. Now, looking at these resistance and support levels here, I think we can say that levels like 1860 and then on the upside 1936 are important levels, and I'm going to show you now why I think that is the case. First of all, if we take the distance of, or the sort of width of this recent range, and let's look at the bearish scenario first. So if we see the market breaking out of this channel, I think it's quite easy to assume or expect the market to move roughly this direction, roughly this distance from as measured from the low of the range. So it's basically the same width, same distance, and that takes us to the recent lows, roughly to these lows here. So that would be the sort of prediction given to us by the market symmetrics at the moment, or the market structure. And if we look at the upside, I wanted to show you this as well. 1865 roughly would be the level to look at. Now, if we look at the upside, and I think this is a little less likely scenario. That's why I have marked that on gray, but that's a less likely scenario because the market is trending down lower in this big channel at the moment. But if this market was to break above the current range, I think we have good chances of market moving to at least these highs here, 1933 or so, and maybe even higher. And that the higher level would be the recent supports, or the areas where the market found support in September 11th and 17th. The market moved sideways there, and now this width here is pointing to the same resistance. Obviously, in order for the market to get to those levels, it needs to go beyond 1860, and it even has to go beyond 1933.28. But on the downside, we do have some key levels here, obviously 1888.80, 1882.20, and then 1872.75 over here from October the 6th. So these are the sort of technical factors that I'm seeing in gold at the moment. In the near term, but I also want to show you something else. Let me take off some of the items here. So we do have something that could develop into a head and shoulders formation, and so this would be the left or the first shoulder, and this would be the head, and then the other shoulder. So if this movement here turns into a lower high than this, then we have a head and shoulders formation, and the neckline would be this red line here. Now the width of this formation points all the way down to 1842 or so that would be a continuation move in this downward trend. At the moment, the prices are making higher lows there, and the neckline isn't broken, so we can expect the market to challenge these highs, and then the question will be if the traders are going to be bullish enough to push the market above. I think there's a good chance at the moment, based on what we can see in the stocks, that market rallies a bit and then creates a lower high, and then we can see what happens. But let's wait and see. This is the current situation, and if I see a trade setup in this market or some other markets, I will make a video so that you can integrate this or that setup into your own analysis, and maybe take advantage of it if it agrees with what you do. So basically, once more, we don't provide investment advice, but we give you tools and understanding on the market to develop your own trading and become a better trader. So as usual, I would like you to trade safe. Do never ever trade without stops, and always sort of create positions that are not too big if you happen to lose, because all of us, we have losing trades, and we all have to be there to fight again tomorrow. And if we take too big positions, it's obviously going to cut into our trading account too much. So make sure your losing trades are smaller than your winning trades, and I hope there'll be lots more of the latter kind in the next coming days. Stay tuned for more videos, and I hope to see you soon.